Jeff Whitaker, and this is Top of Funnel. Today, we're going to talk about a company that is I've recently put on my watch list that I'm very excited about, called Nextracker. Nextracker creates the world's leading solar panel tracking equipment, which are solar cells that are arrayed in large utility grid scale applications, uh, which have this Nextracker tracking equipment that tracks the path of the sun as the sun travels across the sky each day. This Nextracker technology, and they're the leading company in this space, improves the efficiency of the collection of light from solar cells by about 20%. And although it doesn't sound like a huge number, when you are building out massive utility grid scale solar energy collection projects, that 21% over the life of the solar cells turns out to be a huge economic advantage in the production of solar. Solar is currently the least cost method for humans to generate electricity. There's massive demand for electricity, rising demand based off of the build out of the AI data center infrastructure that's needed. Plus, we have electrification of transport that's occurring in a very major way. It consumes a lot of electricity. So demand is off the chart. I want to show you some information that I put together in this little PowerPoint. So, so the Nextracker equipment on this picture, we can just see it's this stuff that tilts these large solar panels back and forth to follow the sun. 2013, relatively recent company. I would say that this company is kind of in the sweet spot of its growth phase. Okay. Here's a chart that shows the average wholesale price. No, actually, this is retail price of electricity in the United States over the past 20 years or so. And you can see that for many, many years, we had very stable electricity prices in the United States. Fracking and the ability to produce natural gas at relatively low cost helped keep this under control. Plus, we had mild inflation. A lot of this growth that we see here, I would say maybe 30–40% of it is probably just due to higher inflation rates that we have experienced over the past 4 or 5 years since COVID. But a lot of this growth in the retail price of electricity is due to, well, guess when ChatGPT came out? It was right about here. So I believe that a large portion of this growth and the demand going forward as we go through 2025 and 2026, 2027 going forward is going to be massive, massive demand for electricity. Right. I mentioned that energy is becoming the new choke point in the training and inference for these massive AI data centers. I mean, just one example of how bad this energy generation choke point is that recently both Google and Microsoft have against failed attempts to build out AI data centers in the Midwest because the local communities rose up and stopped the development due to the fact that they were concerned that the electricity that they'd be pulling off of their utility grids were going to drive up electricity costs in those communities. XAI, Elon Musk's response to the open AI company, had to go to Europe in order to purchase a defunct, not operating gas turbine power plant in order to create its Colossus 2 um, in Tennessee, Memphis, Tennessee. They actually purchased an entire power plant in Europe, disassembled it, brought it back to the United States, reassembled it just across the state line in Mississippi, and then ran a massive cable over to the AI data center in order to power this Colossus 2 AI data center that is going to be drawing enough electricity to power thousands and thousands of homes. And all of these big money, hyperscale type companies are in a mad race. It's like a gold rush of trying to be the first to have, AGI, or basically human level intelligence for the systems. And in that kind of market, whoever reaches that level of intelligence first is going to capture the majority of the share of the market, and the amount of money that they're putting into this AI build out is huge, as we've seen with the demand for example, NVIDIA's GPUs that go into these data centers is catapulted NVIDIA up to be the largest company by market cap in the world. So let's look at some of the financials for Nextracker. We have past 5 years average annual revenue growth of 20%. But if you look at the past 3 years, we have 26% average annual revenue growth. So we have accelerating growth in the revenue it's generating. So that's very exciting. Earnings growth rates, however, are much more exciting than that, because past 5 years, we have earnings growth rate of 34%. We have past 3 years, 116% average annual growth in earnings. Okay, earnings are just exploding, which indicates that as this company is expanding and growing into this more mature stage, it's benefiting from all sorts of economies of scale, in addition to increasing demand and reputation that is enhancing its distribution of product. You could say that we're kind of generating like a favorable flywheel effect for this company that some people might call momentum as it goes forwards. Current price to earnings ratio is that of the S&P 500, which is 25%. Ridiculous. Okay. With that kind of earnings growth, revenue growth, that PE suggests a 5% per year earnings growth rate, which is way, way under what is actually going to happen. If you look at what the financial community, Wall Street professionals are thinking, their average consensus is 7% per year earnings growth rate, which I think the Wall Street pros just are completely missing the bigger picture and what the opportunity is for this company. Okay. In my opinion, the price earnings ratio should be at least 35 to 40, which indicates that it's undervalued by about 80%. It should be selling, instead of $99 a share, it should be about $180 per share, right? So if you run the numbers on where I think the price earnings multiple should be at the earnings growth rate, I would say that the most probable annualized return that you'd get over a 5-year investment in this company would be about a 35% per year return. Okay. My personal hurdle right now, because there's so many opportunities with the AI infrastructure build out and the AI transformation of the economy that we're seeing, is that I'm not putting any money into any company that I don't think is going to generate at least a 40% per year return going forward. So Nextracker actually doesn't quite meet my my threshold for an investment. It's on my watch list. If the price were to drop down into the low 90s, okay, that would be my trigger to start purchasing. Okay, so this has been top of funnel. Uh, you need to do your own research. My risk tolerance for investments is different than yours. Everybody has different risk tolerance, so you need to do your own research on this. The stock symbol is NXT, and this is Tuesday, October. What is today? The 28th, I guess. And, uh, right now, as of Tuesday, October 28th, it's currently trading at yeah, it's about exactly $99 per share. So, anyways, some ideas for your top of funnel investment ideas. Thanks and have a good day.